Hello everyone, this is Atik and welcome back to another video on financial accounting. In this video, we are going to post some journal entries to General Ledger. In my previous video, we worked on some journal entries, and in this video, we are going to continue with the same question and take those journal entries and post it to the General Ledger. It is a very simple process, so let's jump into it. A typical T account in the general ledger would look like this. At the top of the T account, we will put the name of the account that we are dealing with. The left hand side is our debit side and the right hand side is our credit side. And for each row, we will provide a date on which the financial transaction occurred. Now let's move to the journal entries section to see what we have. The first entry was on July 1st, where we debited cash by $80,000 and credited common stock by $80,000 as well. So we will move to the cash T account, and on the left hand side, that is the debit side, we are going to put $80,000. Then we will move to the common stock T account, and on the credit side, that is the right hand side, we are going to put $80,000 as well. The next entry was again on July 1st, where we debited prepaid insurance by $9,600 and credited cash by $9,600 as well. We will move to the prepaid insurance T account, and on the left hand side, that is the debit side, we are going to put $9,600. And then we will move to the cash T account. On the right hand side, that is the credit side, we are going to put $9,600. The next entry was again on July 1st, where we debited store rent expense by $5,600 and credited cash by $5,600. So we will move to the store rent expense T account, and on the left hand side, that is the debit side, we are going to put $5,600, and then we will move to the cash T account, where on the right hand side, we are going to put $5,600. The next entry was on July 6th, where we debited repair equipment by $10,800, credited cash by $5,800, credited accounts payable by $5,000. Now we will move to the repair equipment T account, where on the left hand side we are going to put $10,800. Then we will move to the cash T account, where on the right hand side, that is the credit side, we are going to put $5,800, and then we will move to the accounts payable, where on the right hand side, that is the credit side, we are going to put $5,000. The next transaction was on 8th July, where we debited repair supplies by $850 and credited accounts payable by $850. So on the left hand side, that is the debit side of repair supplies, we are going to put $850, and then on the right hand side, that is the credit side of accounts payable, we are going to put $850 as well. The next entry was on 10th July, where we debited telephone expense by $600 and credited cash by $600 as well. So on the left hand side of telephone expense, that is the debit side, we are going to put $600, and on the credit side, that is the right hand side of cash, we are going to put $600. The next entry was on 18th July, where we debited accounts payable by $600 and credited cash by $600 as well. So on the left hand side, that is the debit side of accounts payable, we are going to put $600. And then on the right hand side, that is the credit side of cash, we are going to put $600. The next entry was on July 31st, where cash account was debited by $18,650 and pool service revenue was credited by $18,650. Now, on the left hand side of cash T account, that is the debit side, we are going to put $18,650, and then on the right hand side, that is the credit side of pool service revenue, we are going to put $18,650. The next entry was again on July 31st, where we debited electric expense by $500 and credited cash by $500 as well. Now on the left hand side, that is the debit side of electric expense T account, we are going to put $500. And on the right hand side, that is the credit side of cash account, we are going to put $500. The last entry was again on July 31st, where cash dividend was debited by $1,100 and cash was credited by $1,100. So on the left hand side of cash dividend account, we are going to put $1,100, and then on the right hand side of cash account, we are going to put $1,100 as well. The next step is to figure out the ending balance of these T accounts. I will show you how to do that for 2 accounts, and I believe you will be able to complete the rest all by yourself. So the first account we are going to deal with is cash. Now we are going to add the debit side of the T account. We have only 2 items, that is $80,000 and $18,650. If we add these 2 items, we are going to get $98,650. Then we will move to the credit side and add all the items. We have 9,600, 5,600, 5,800, 600, 600, 500 and 1,100. If we add these items, we're going to get 23,800. So we can see that the credit side is lower than the debit side. So debit side is higher. So what we are going to do is we are going to deduct the credit side from the debit side. So 23,800 is being deducted from 98,650. We will get a balance of 74,850, and this is a debit balance because the debit side was greater than the credit side, so it's our debit balance. So cash has a debit balance of $74,850. The last three account that we are going to deal with is accounts payable. We have 600 on the debit side. So the debit side balance is 600. Then on the credit side, we can see we have two items, that is 5,000 and 850. If we add 5,000 and 850, we are going to get 5,850. And from that, we are going to deduct 600. So that will give us a balance of 5250. Now, our credit side was higher. So this balance of 5250 will be our credit balance. So that's all we have for today. If you face any issues while posting journal entries to general ledger or figuring out the ending balances of these three accounts, then do let me know in the comment section and I will definitely reach out to you. Thank you so much for watching. Do like and subscribe for more accounting videos every week. See you in the next video. Till then, goodbye and take care.